what is the opportunity cost of buying a family home or owning Bitcoin over the next 5 years? And, side note, I've got an episode coming out with Key Player on Monday where we talk through this. This episode will go out Friday. AI is just shifting things so rapidly. And it's happening in my little area of the world, which is investing. Like, I have run countless spreadsheets over the years, countless. I honestly, I couldn't even think how many it's been, trying to figure out, is something a good idea or a bad idea? Researching, getting primary bits of data, looking at the business itself, or if it was a piece of real estate, whatever it was, I had a spreadsheet for it. And then suddenly it's like, hang on, I can write, a small sentence, and then out comes all of this information. It's how do I say this? A piece of investment research that previously would have taken weeks is now achieved in seconds. Like, fuck me. This isn't like, 10 times fast. It's 100x. And what's cool is it shows its reasoning. And that's the particularly important thing here. And so obviously it's like, okay, you have a pot of capital today. What is the optimal allocation for you? It's not for the index. It's not for a pension fund. It's not for your grandma. It's specifically you. And in my case, we've made an excellent choice by backing Bitcoin in the way that we did over the last 5 years, in terms of financial returns, in terms of freedom, in terms of time. But this piece of the puzzle that hasn't been there is physical real estate. And so we are at the behest of landlords and at the behest of the short-term rental market. And at times that gets really frustrating. You don't control your own space. Now, without going down the whole rabbit hole of like, oh, well, hang on, Jake, if you own a property that's, in Australia, it's actually an IOU to the government that can, put a policeman outside your door at any time. And if you have leverage on it, then actually the bank really owns it. And yes, okay, property rights when it comes to physical real estate are definitely a more gray area than initially meets the eye. So that is a discussion for another time. But what Grok does here is lays out its assumptions. So, okay, here's the time frame you're going to make this investment over. What does the Australian housing market do in that time? 3 to 5% annually. Okay, what's the Bitcoin price today? What's its likely performance? And for example, it quotes Cathie Wood's ARK investment prediction of $1.5 million US by 2030, and it then is going to make an assumption on what is the capital allocation size. And it's saying, okay, well, the average house price in Australia is 800 grand. And then it talks about like maintenance costs and things like this. So, option number one is obviously buy the house. And it's like, well, okay, what would that actually look like? Well, 4% appreciation, which is the midpoint of 3 to 5%. Okay, well, your 800 grand would, in theory, compound into 973,000 by 2030. Okay, great. But don't forget, there's going to be some taxes. There's going to be some maintenance. There's going to be some transaction costs, etc., etc. So your 173 grand of profit, might actually be a margin of more like 50 grand by the time you've taken out all of those. I would call them, well, in the buying and selling sense of real estate, I'd call it a friction cost. This is more an OPEX in a way. It obviously can then make a slightly different scenario, which is if you buy the property with a mortgage and you put down a 20% payment. So you only put 160K worth of equity and you use a $640,000 loan. Maybe you get that at 6%, and it spits out the answer for that. Now, there are some other benefits to mention. Number one, stability for your family. It knows who I am. It's quite crazy, right? I was asking questions previously in this thread about unschooling and where the best places to go are and where's nice and warm, blah, blah, blah. That's another story entirely. But it runs then through, what is the opportunity cost of this? And it's absolutely mega. Investing in Bitcoin, what's the bull case? What's the base case? And you're talking about, huge gains from here, right? 10x gains, 6x gains. And the OPEX is nothing. Essentially, that's because Bitcoin, you just sit in self-custody, which is, years ago, I was like, hang on, so you just have to put this stuff in self-custody and it just pumps away in the background. You don't have to look after it. You don't have any tenants. You don't have any broken showers. It's like, yes. It's like, whoa, that's crazy. And eventually it hits me with an opportunity cost. Yeah, okay, this is where the numbers are kind of extraordinary, right? If you own a home in cash, then the opportunity cost can be as high as $3.75 million. If you own the cash as a mortgage investment, so a leveraged investment, then the opportunity cost isn't as big. And yeah, it's like, wow, okay. So then give some recommendations. Stability, if that's important, obviously buy the house. Wealth maximization is a priority, then buy the Bitcoin. What I thought was the most interesting case here was the hybrid approach. It's like, actually what you want to do is you want to put down a deposit for a home so you get some stability, take out a loan at a fixed rate, put the rest of that money, the 640 grand, into Bitcoin, which itself will pump, and you're then in a much, much better position. So the opportunity cost of buying a home is missing Bitcoin's potential 180% to 1,225% return. I mean, it's just so crazy, isn't it? But it provides stability. So I guess the point of telling this story is, okay, I was thinking about putting an allocation into a Bitcoin startup. It's completely illiquid for anywhere from, the fastest return an early stage equity investment might be 3 years, but it's far more likely to be like 10, 12, 13 years. So completely illiquid that entire time with an unknown return profile because it's a very, very risky bet, but with a potentially huge payoff. So, okay, but hang on a second. When I make a startup investment, what I need to know is it has the potential to 10x. And if I'm going to make 10 bets, all 10 of them have to have the potential to 10x. So you're telling me that actually you could own Bitcoin, which has the potential to 10x, but is liquid that entire time in self-custody. It just reminds you that the risk reward of Bitcoin in self-custody is like nothing else we have ever had the ability to allocate into as investors. It's completely insane how it just shits on everything else. So you get startup-like returns, but for lower risk than owning real estate, in my mind. So it's like, wow, you've got to see something unbelievably special to put your money into that isn't Bitcoin. And in this case, a family home could well be that, but definitely leveraged.